Ready to go. We are live, so remember. So what's up, my man Just? What's going on, everybody? My name is John McLeod. This is Temple Talk. I'm with the Inspirational Church and God of Christ Jesus. And as always, we have a special guest, my man Justin Bain. Been my right-hand brother for over 10 plus years. We've been in the game together. This man is a money beast, genius, whatever you want to call it, and a brother doing his thing at the highest level. Just, what's going on, man?
Doing good, bro. How you doing?
Can't complain. Thank God for yet another day, yet another chance to be with you, man. You're about to bless us with a lot of awesome and crazy, amazing tips when it comes to managing wealth. Before we get into that, man, I want to start with your backstory. So, take us back to the beginning. What made you want to go into, accounting? What made you want to work with numbers? I can't work with numbers. I'm not a mathematician. I don't like math. Only time I like math is when I'm counting money that has to go on my bank account or for the bills. That's the only time I like math. What made you want to go down this path?
From early on, I was always math was always the best subject. Like numbers it came naturally. The money aspect though, that was just I think growing up where we came from, right? Flatbush, Brooklyn, financial literacy wasn't really a thing, right? For, at least for where I was, right?
Yeah.
And so, my parents weren't the best when it came to handling money. And, my mom was always very upfront with like any issues we were having. So, at an early age, I was thinking, oh man, like you could lose your house. You know what I mean? The lights is getting shut off, gas go off. You really find out like how important it is. And like, so I just became money conscious, right? So just thinking about that, and then so like putting the two together, I was just always thinking like, okay, so what can I do? And I just kind of fell into accounting. I just kind of went with it. Didn't really understand the real necessity of it, the real importance of it, until I really went into the field.
Okay, so you didn't grow, and it wasn't easy growing up, and you kind of fell into first learning about how to be better about your money through family situations, through life. When you start to think about that, what was the defining factor that said, I actually like this. I actually like doing this. Can you think back to that moment, and what was it that said, I like this, I'm good at this, I can do this?
Honestly, I would say it wasn't till like I was really, because honestly, when I started accounting, I was failing left and right. Like, to complete transparency, I wasn't taking it serious, right? I think it wasn't until later on, I took this cost accounting class, and at the same time I was taking a personal finance class. And, the guy really explained, he was like, accounting is the language of business. If you want to understand anything, whether, investment, finance, you have to start with the basics. You have to start with the financial statements. You have to understand it. So then he would give these projects. So like you would actually go into financial statements, like, it was like massive. Like you go through the whole thing top to bottom, doing ratios and seeing like how well the company is doing, in comparison. You see like the balance sheet. So the balance sheet is basically where the assets and liabilities are. It's like a snapshot of the company. And the income statement is like how much cash, how much money is the business making. And so like I'm like working, Navy at the time, and all of a sudden I'm start putting the pieces together. I'm like, oh, okay, so this is the inventory. Like me cashing out, I see I'm taking in the revenue. My salary, my little $8 an hour is expense to the
That was
business,
a lot back in the day.
right? And I'm just seeing how it all comes together. And I think I started investing, and so then I'm like, really, I didn't even have the strong concept when I started, but I had enough to say, okay, this is something I kind of want to stick with.
So, okay, so you found out, okay, this was my niche. This is what, I want to do. This is where I want to be. And now you're in it. You're going through it, you know, you and I have been best friends for years. So I had the pleasure of watching you before you got to this point and all the different types of struggles. For somebody that was in your place, or somebody that's in the game that's thinking about wealth management and money, what would you say is the first thing they need to start thinking about right now?
To managing their own wealth.
Yeah, or to increasing their wealth. There's somebody, they don't want to, they may be saying to themselves, I don't want to wait till I'm 65 to retire. I don't want to wait until, I get the right job that pays me six figures so I can buy the things that I want. Because by then you're not know we don't know where you're going to be in life, but I want to take action now. Speak
Yeah.
to that person. What can they do right now?
I think the very first thing that you have to do, if you're not doing already, is set up like a net worth statement for yourself, a personal net worth statement, right? How much do I own and how much do I owe, right? So set up all your income, all your bank accounts, wherever you have cash, all your investments, and then you're gonna take all your debt, every credit card you owe, every student loan, whatever you have in that debt line, and then you're gonna net it, right? You're gonna subtract the debt from the assets, and you're gonna figure out how much you're worth, right? I think that's where you have to start. Mm-hmm.
So for everybody watching, and let's say we got 11 people so far, and I know that number will increase as we continue. You start with figuring out what your net worth is immediately. And I'm guessing you say that to give yourself a base, to know where you are, to know where you're going.
Yeah.
And how do you figure out your net worth again?
It's total assets minus total liability. So assets will be anything that's worth something financial. So like it could be cash, it could be your investments, 401k, even your car. The worth of your car is that would get counted toward the assets column, and then the liabilities. So any debt you owe. So same thing. If it's a car, if you have a car, if you finance the car, what you owe against that. Any student loans you have, any credit cards, any kind of debt you may have, that's going to go in the debt column. So once you subtract the difference, that's basically how much you're worth.
Huh. That's interesting. I didn't know how to. Well, I didn't start thinking of net worth until later in life. But most of the thing that is very common in our society is when we hear the term net worth, the first thing we think of is are rich people. We don't think about ourselves. We think we have to accumulate a certain amount of wealth to be even considered to even check out what our net worth is, because the common way somebody looks up their net worth is through Google, and they try to figure it out. And Google can't tell you what your net worth is. You got to know that for yourself. So Justin just gave us his first tidbit of the night was his check. If you want to start improving and you want to start building wealth, you have to know where you are financially to determine your net worth, your net worth or your net wealth. You have to subtract your liabilities. You have your assets and subtract your liabilities, and that number, when you take everything into consideration, is your current net worth. Now, let's go back into the history books. Justin, you graduate from Brooklyn College, shout out to BC, and then you go from BC and you continue into college and you start to prepare for your CPA. Now, let's be clear. You could have been an accountant once you graduated, correct?
Yeah.
So now, what made you make the decision? He's a CPA accountant for KPMG. We're going to get to that journey, but I want to talk specifically. What made you say, I need the CPA in front of that title accountant?
I think a large part of it is because when we kind of started college, that was basically going into the Great Recession, right? The mortgage loan crisis, and that was, you were seeing people lose their jobs left and right. So that was something I thought about. I was like, oh man, this is crazy. We're going to college for what? Like, we're about to leave and not, can't find a job. So one of my main drivers for first pursuing the CPA is just that recession-proof title. Like, once you have it, and once you have the right experience, like, I'm not concerned about ever not having a job. It's always going to be about having the job that I want. I think that's one of the biggest things. I think another thing is just like, that prestige, but then also the importance for like the next generation. I think less than, I can't remember what the number is, but I think maybe 4% of all CPAs are African American, right? And to be honest, I never heard of a CPA until I got to like college. I had no idea about any of that. And that's also like a big part is the representation, because it's really important, because I mean, we could go into it in detail later, but one of the big things that I attribute my success to is me joining NABA. So that's the National Association of Black Accountants, and so basically it's basically like a networking group of accountants who have African American heritage, but you don't have to be Black. There's allies within the organization as well. But one thing is meeting all these Black partners. All these guys, these are multi-millionaires. These are people who make it like $1 million a year type. And I'm just like, wow. And just to know, and just like me talking to them, I met this one partner in particular. He's from Texas, from Houston. And I walked up to him. I was like, excuse me if I'm a little nervous. You're the first partner I've ever spoken to. He was like, yo, don't you worry about young blood. It's all good. And, I told him I have this habit ever since I was a kid of saying son all the time. It's just like, and I'm like self-conscious about it in the corporate setting. He was like, I understand that, man. Down south, it's like slime. Like, what up, slime? Like, so, and like he had that understanding, and just to have that kind of interaction, that's just one of many that I've had. But once you get to the actual wherever off it, because that's like a conference of like basically all the Black accounts in the country, right? But once you get to the corporate setting, it's not like that. And that's kind of part of like wanting to be part of the representation, to kind of set an example for those who was like me,
That's incredible. That's incredible. There's a couple of things that are incredible about that. And the first one is 4% of CPAs are Black. 4%. That's an incredibly low number. The second thing I like that you said is with NABA, National Association for Black Accountants, you don't have to be Black to be a part of it. We're in a hypersensitive era of life now, especially in America, where the Black community is now on the the forefront more than before, more than ever. And I think it's just phenomenal that NABA allows, other races inside. It's not just one. We understand the origin and why, but I think it's important to be able to expose other people to our culture, and also and that in turn it enhances the abilities of everyone around. So one of the things that I want you to dive into is the process of getting your CPA. I was with you from day one to the day you said you got it.
Struggle, boy.
Oh my Lord. Watching you made me never want to do math ever again.
Oh man.
To somebody so I want to speak specifically to accountants now. We're gonna go a little deep now. We went into the backstory. We know he's from Brooklyn College. We know that he's part of NABA. And we know that his driving force, Justin, we're talking about now, is to not only be a game changer, but to affect the next generation. There are tons of people all over the place. We have tons of different types of followers here on YouTube. Talk to the younger person that may be thinking about accounting, maybe wanted to become a CPA. Talk to all generations, all levels, all ages on the process that it took and what was the most important thing. Give me three most important things that they must do to achieve the CPA, those three letters next to that title.
Okay, so I'll just start with the bare requirements first. To become a CPA in the state of New York, you need 150 credit hours, and of those credits, you have to take certain accounting classes. There's certain requirements, and you could find that on I think it's NASBA.org. But so you need 150 credit hours. So that's basically 5 years of school. Whether it doesn't have to be a master's, it can be 5 years of undergrad. But on top of the education requirement, you need to work 1 year of qualifying experience. So in most cases, that means working under a CPA directly, who can sign off for your experience. And there is a list of jobs specifically that you have to be doing in order to qualify. So that's that aspect of it. And then there's the exams. So you have to take 4 exams. 4 exams, and the passing grade is 75. You have to pass all 4 exams within an 18-month period. From the minute you take that first exam, there's a clock. So they give you a date for you to finish all 4 exams by, right? So if you don't finish it within that time frame, you lose the credit, right? And keep in mind, each of these exams are probably, it's probably changed now. But when I was taking it, it was about 200 to 250 an exam. Yeah. So that's per exam. So basically $1,000 to take all 4. I think it's about 200. Yeah. So 800 to 1,000, right? Anywhere between that. Yeah. And so just talking to the main points, I think one of the biggest challenges is getting through the material. I wish I kept some of my books here so I could show you how thick they were. But once I passed that test, I threw them all in the garbage. They went straight. Like, there was no hesitation. I was like, I'm not even trying to sell them. Like, they just got to get out of here. I don't want the reminder. But, so that, the biggest part is getting through the material in time to take the exam. So you have like, they call it NTS. And I think from the minute you buy it, So I think you have, I want to say 6 months to take the exam, right? So from the minute you purchase it, you have 6 months to set up the exam and take it. So once you buy it, you kind of start that clock. So you have to study and take the exam by that time. And, honestly, just sitting down and focusing and getting through that material is the toughest part in that time frame, because you could slack off. People like you, it might be like the most important thing to you, but people still moving their life, going through their life, always sending you invites, birthday parties, whatever it is, and you really have to dial in if you want to get this done.
So now, specific question here. What are some tactics that someone can do how do you attack a test that how do you attack a test that has 4 heads? Do you know what areas each section are? Like, or is there something where, you just got to prepare for everything and wait until they start shooting at you? So how do you prepare for each part? What is the process that worked for you?
So there's 4 sections, right? So each section has its own set of subjects. So FAR is financial accounting and reporting, and that's the largest part. That's where you're gonna have like a lot of the basic accounting type principles. So it'll be like, how do you do journal entries for stocks? How do you do journal entries for bonds? Stuff to that nature. And then also just certain reporting requirements. That's where a lot of that's going to be. So that's, if you are in accounting, that's basically the bulk of the coursework. When you go to college, so you do intro, intermediate, advanced, and they have multiples of each classes. That's basically the bulk, and that's the largest book. So for that one, you have to be ready for everything when you get to the test. So let's say there's, I don't know, 15, 20 chapters. You have to know each one of them, because you never know what you're going to get on the exam. I've certainly failed a couple times, and each exam completely different than the last, right? They do switch up the topics they switch up the types of questions, but it's all under the same umbrella. So for each section that you take, you have to be ready for the whole section. And there's no way around it. I think like one of the biggest pitfalls is when you try to take the shortcuts. Like you try to say, well, this part's not that important, so let me go ahead and skip this, right? Like you gotta go through everything. I think that's like one of the biggest things. You have to get through everything, and it has to be quality studying too, because when you're reading and your eyes are just moving along, but you're not really retaining anything. You don't got to the bottom page and you're like, what is that? Oh, you muted.
Sorry about that, but yeah, I wanted to make sure I let you do your thing. But yeah, I know exactly. I know what that's like.
Oh.
So now, you have the CPA accountant. You get hired by KPMG, one of the big 4. Talk to me about the difference and how talk about wealth management. Now we're going to get into what everybody wants to hear about. Managing wealth at the highest level. Give us a day-to-day at KPMG for you.
Well, I mean, for my job specifically, I'm in audit. So I do audits on financial statements, provide assurance, for investors. So specifically, the area that I'm in real estate and private equity funds. So a majority of my work is looking at different property valuations, seeing the different kinds of cash flows coming from the properties, and testing the assumptions that are going into it, and then also reading through purchase and sale contracts for all these investments.
So, so now you look over the contracts that these million and billion-dollar companies use to purchase properties all over the world. You look over the financial statements for those high-level, very massive companies. Take me through the first principle that you've seen with each of these levels. Because remember, our audience, I don't know anybody in the audience that has $1 million right now, but for the most part, we're hard working class people. What are their principles that you've noticed that we can adapt?
I think probably one of the biggest things is probably like studying actual cash flows, right? Return on investment, like studying, okay, so if I buy this property, how much is it going to generate? How much income is it going to generate for me versus how much money I have to put in, right? So you figure out the ROIs, and then you kind of back into the valuation. So in most cases, they do like a discounted cash flow. So they say the present value of all the cash flows, all the like the NOI, so net operating income, from the day I purchase this until the day I plan to sell it, and you get the present value for that. So like they see, okay, they run the numbers and they're like, okay, are we going into this investment or not? Right? Is it worth it? And they do this every day. So, by the time I get to it, they already made the decision. This is like what they're doing, and you see like the gains that they're making on these investments. So I think one of the strategies that like a lot of my clients use is they find distressed properties, right? Properties that aren't the prettiest, aren't the nicest, and have that room for improvement. So they go in, they renovate these units, and then they flip it to increase the NOI on the property. So basically, NOI is revenues minus expenses, like the operating. So in a rental property, that's basically rent minus whatever expenses. So electrical, gas, maintenance, taxes, insurance, stuff like that. So they go in, and the rents might be lower because the properties aren't as they're not developed. They come in, they build them up, and then they might sometimes double the rent, right? And then and now they're operating at that capacity, and then they sell it back out for a much higher return on their initial investment. I think that's one side of it. Another thing is how they use leverage.
Wait, so before you jump into leverage, I want to backtrack and give the audience some layman's terms type of explanations. One of the ways these huge companies are building wealth is through real estate. Justin just said they buy distressed properties when they have the capital, they fix them up. Sometimes they flip them for a profit, or sometimes they fix them up, they hold it, they rent them out at a higher rent because it's fully renovated, and then later on down the line they put it on the market and make 2 or 3 times what they originally bought the property for. I say this to you: wealth management tip number 1. Real estate is something that you can easily get into. You do not need a degree. You do not need you don't need certifications. It's a skill that you can learn on your own for free. And these companies are operating with massive teams doing basic things. So increase your wealth, increase your net worth. Justin spoke about it earlier. Increase your assets reduce your liabilities. Real estate, having real estate as an asset, your house, another rental property, all of that stuff adds into your net worth and builds you up over time. So, wealth building tip number 1, look into real estate. You can do it, and you don't have to manage it. You can have somebody else manage the property. But if you want to be truly financial free, one of the ways to do it is to own property. Justin, continue.
Yeah. So what I was talking about before was just it's a difference of how they use leverage, right? So there's so many different methods to make money, right? So just the most basic is a lot of the money they're using to make this profit is with leverage. They get so they take out. It depends on like the situation, right? In some cases, they'll take out a loan like a mortgage, right, just to get into the deal. And then they'll carry that property, and then they'll add capital to basically increase the value, to renovate, to improve it. And so, once they do that, they just keep refinancing. So you increase the value of the property, right? Now you can refinance because you have more equity in the property. So you'll refinance and get perhaps a lower rate. So now your payments on that debt is lower, but the value you get from the property is higher. So that's just one aspect. Another is some of these companies are buying loans. So you could take out, let's say, a construction loan to build up a building. The collateral on the construction loan is the building being built. Some of these companies are buying the loans itself, if these loans are about to go into default. So basically, people aren't able to make the payments, or maybe construction got delayed. There's many reasons why this will be a distressed loan, but you come in, you pick up the loan, and that loan goes into bankruptcy proceedings, and you basically pick up the asset. So now the collateral is due to you. So you sell the underlying property, and you make money on that deal, because now when you bought the loan, you probably bought it at a discount because maybe the original lender, they just wanted some cash. They just want a guarantee of some money, right? Because if it goes into default and there's absolutely nothing, you get zero, right? But some of these guys, and they're running the numbers. They're just like, okay, can we do this deal? And man, it's just so crazy. Like, they're buying and selling debt and just making millions off of this. And that's just like the smaller end of their portfolios.
Oh my goodness. So again, I want to help break this down further. These massive multi-million and billion-dollar companies are not just buying direct houses and buildings and lots. They're using loopholes to obtain assets for cheaper or for pennies on the dollar, and then adding it to their portfolio. So we're in the wealth management, in the wealth improvement area of this conversation. One of the things that the wealthy do is that they utilize leverage. They utilize different tactics of paying for properties. You don't always have to have all the money. Sometimes you don't need any money. One of the things that they do is they buy a loan in default, I don't know how many people walking around today, average people, know even how to do that, or know even that they can do that to get it to buy a property.
Mm.
I want to tell a quick 30-second story. I know of an investor that built up his portfolio, 5 properties. The most he spent altogether was $5,000. Each house, the minimum amount on each of those houses was north of $100,000. But he owns all of those houses, and all the money out of his pocket was $5,000.
Yeah.
Folks, I can't stress this enough. Financial freedom is right in front of you. You just need to know the information. You just need to know how to do it. That's why we're here with Temple Talk, talking to people like Justin, who's seeing this for himself day in and day out, helping deal with these $1 million companies and seeing the things that they do and seeing how they do the things that they do, because often it seems like a far gone secret, like something that you have to have a certain amount of money to even access the information. But Justin is explaining to us, you can have that. You're having that information right now, and you can use it to power yourself. Justin, we spoke about real estate now. What if we don't want to get into real estate? What if, real estate is really not my thing? What is the next thing somebody could do to start improving their net worth, start improving their wealth, their ability to increase their wealth over time?
I mean, honestly, my go-to is stock investing, right? There's multiple ways to get into it. I think the safest ways are 401k. Just set up your deductions for your 401k. Usually your employers match any contributions, and that's basically free money, right? And then that's probably you set up the risk profile on your accounts. So the younger you are, the more riskier you want your investments to be. You want it more stock heavy early on because you have the time to bounce back through any any downturns we might have in the market. That's one way. Also, so let me just start by with my investing strategy. I'm trying to retire early, right? So I'm trying to find any kind of tax advantage benefits that I can. So with that said, the Roth IRA. If you don't know what it is,
so just before you go there,
yeah,
I want you to be specific if you can. What age are you trying to retire
at? So I have a soft target at 50. So
50 years old, folks. So regardless of where you are, the baseline for us now is we're listening to Justin. His target, his soft goal is 50. The soft goal meaning that there is room. It could be earlier, it could be later, but his soft goal is 50 years old. Pick a year, set a date, visualize it, plan, and attack it. Justin, your soft goal is 50. How are you doing that? Continue.
One thing I do, I contribute to my Roth IRA. So basically, the Roth IRA is a tax advantage. And it's an account, basically, right? So you can contribute. The amount you can contribute changes every year, but currently it's $6,000. You contribute $6,000 to your account every year, and you can invest it however you like, right? Any gains, any basically any cash you earn in that account is tax-free when you take it out at retirement. So now, if you were to contribute those, like you make your contributions as early as possible, right? And you are investing, and you could just invest in something like the S&P 500, right? You could do that through ETFs. So ETFs is an exchange traded fund, which tracks
market. Yeah.
Yep. So you could take that cash and you could do something safe, and you could invest it in something like the S&P. I think average return on the S&P 500 for the past 30 years is about 10% a year. If you just contribute that from, let's say, I don't know, it depends on how the age is, right? So, let's say starting at 25 or even 30, like if you just make those contributions by the time you get to retirement, you'll have $1 million. And that's like not, that's just from the compound interest of it, right? Yeah. That's just the time value of money. And then it just like anything you make on it, you just reinvest, right? And over time, it's just you're going to become a millionaire just by doing that.
Wow. So now,
and that's tax-free money.
Yes. Let's be specific here. A Roth IRA it's an investment account, a retirement account that allows you to compound your money over time. The maximum you can put in, Justice said, was $6,000 a year. You do that year after year, and the money starts to double and double and double, and you end up at $1 million years down the line. Now, specifically within that Roth IRA, if you have already been doing that or some form, you have a 401k. I want you to also get into this. We got about 10 minutes or so. We're gonna continue, and then we're just gonna wrap this up. Going back to, so we spoke about real estate. We spoke about, your net worth and how to establish that, how to figure out where you are in the net worth scheme of things, what your net worth actually is. And now for the person that's not into real estate, how they can build money. You spoke about stocks. So stocks is one thing that you can use to invest in. Roth IRAs is another way you can do those things simultaneously, and you can build. In reference to stocks, can you give? I want to give the audience some tangible things that they can do. What apps do you use? How do you actually do it? What apps do you trust? What companies do you trust when it comes to setting up the Roth IRA or the IRA?
Okay, so personally, when I started trading, I guess around 20 years old, I started with Scottrade because at the time it was the cheapest per trade transaction fee. So they, back then you had to pay for every transaction. So $7 was it. So that actually got acquired by TD. So that's what I use right now. And basically almost all brokerage accounts that I know are free, $0 transaction fees, right? So nothing. It doesn't cost you anything to make a trade. So TD, I recommend it for information. There's a lot of good information on TD. They have a lot of tutorials actually. So if you want to get more in depth about like the different types of investment tools, they have hundreds of tutorial videos on there. But it is a lot to look at starting out. So I do use Robinhood. Robinhood is a lot simpler, pretty basic. And then also, so one thing that you could do on Robinhood that you can't do on TD is you could invest in partial shares. So that's big. So like basically, depends on what kind of investments you're following. But let's say if you want to invest in Apple, I think per share right now, I think I remember seeing 160 earlier today. I'm not too sure, but let's say 160 a share, but you only have $10. Let's say, I don't know, you just put $10 into the account. You could buy a partial share of Apple for $10. So it'd be the equivalent. So whatever 10 divided by 160 is, that's a percent of stock of
And
one share.
Robinhood will let you do that.
Robinhood will let you do that. Yeah.
That's important, folks, because you don't have to have the full amount of that one share in order to buy the stocks. That's saying you can buy into Apple, you can buy into Google, you can buy into Microsoft, you can buy into Tesla. Those things are attainable. You can buy into it and you can take action now. You can take action today. Continue, Justin.
Yeah. So just to add on to that, I think just because you're getting a fraction of the share, your money is still going to move the same percentage as the stock moves. So, just to simplify it, if a share is $10, right? If the share is $10 and you buy half a share for $5, if the stock doubles from 10 to 20, your $5 is still going to double to 10. Like, it's still going to behave the same just because, just because you're not fully invested, like the amount of money you put in is still going to grow the same with the rest of the stock. So that's one thing. And just Robinhood, just speaking for the app itself, it's simple to use. It's not too much going on. Its charts are pretty basic. So I think it's very user friendly.
Awesome. So, folks, you have an application that you can use, Robinhood. Download it now on Google Play Store, Apple Store. Find it, the iTunes Store, whatever you have to do to find it. Download it right now. It's very easy to use, and you can start increasing your net worth and owning assets immediately, depending on what you do with it, depending on what you buy, and just continue to do some research. Finally, the institutions to a Roth IRA. What are the ones that you trust?
My Roth is in TD. My Roth is in TD. I think if we're talking about recommendations, I think for someone who probably doesn't know too much about what they're doing, I know there are Robo Advisors. So they do have like Roth IRAs that use Robo Advisors. I don't know too much. I don't use them myself because I pick my own investments.
Okay.
But I have heard good things about them. So that's something I would. So Betterment, I believe, is they have a Robo Advisor, the Roth IRA account. So and just in general, I think because one thing we haven't really spoke about is just like finding out how to pick whatever whatever stocks you want to invest in. I think one thing that everyone who is investing in stocks should do is learn how to read financial statements. There are books. I think there is one book I highly recommend. I think it's like Warren Buffett and the Interpretation of Financial Statements. I'll have to double check to make sure that's the full title, but it basically tells you what each account is, how the relation to each other, what you should be looking for. I think that's just one thing. Also, just general advice: don't invest in anything you don't understand. Like you will find there are a lot, and especially now with YouTube, Instagram, there's a lot of people giving up, their stock picks, telling you this whole breakdown that's going to be big. And when you hear all these things, you kind of get excited sometimes. It's like, okay, yeah, let's get into it. But if you don't know what it is, don't invest in it. Like I see like biotech firms. It's like, I don't know what that is. I'm not going to invest in it, right? Like the stuff I invest in stuff like that I use that I know, like Coke. That's one I got from Warren Buffett. It's like, if you really look at the product, right? Look at what they're selling, look at the company, how's it running, and then like the brand recognition. You know what I mean? Like Coke, like where is Coke going, right? Like what can the public find out about Coke that's going to make their business like go into the ground? People know you could clean toilets with Coke, they still drink it, right? They do bottle rockets with Coke, they still drink it. Like it's like, and if you look, they have solid dividends. But that's just an example, right? And like anyone who's grown up, like around barbecue, like Coke, like that's just so like start with those companies, right? And then also ETFs, like we talked about before.
So top the ETF right now. So that's excellent advice, folks. Always invest in what you know, and if you don't know something and you see that you keep hearing that it has potential, do some research. It's very easy to do, but here, this information is maybe some things you have heard, maybe some things you haven't, but this Justin has given us information, the same information that is being utilized from people in the places that you dreamed you were at now. Those same people are using the same tactics in volume. So if it's coming back, it's because they work. So now, we spoke about Robinhood. M1 Finance is another app that you can use. And the trick with M1 Finance, which makes it so great, you're not going to get taxed when you do sell stock because it's with a Roth. You can invest with a Roth IRA from what they say. So you're technically investing with tax-free money. So, but again, continue to do your research and continue to see how much you would like to put in. So M1 Finance is one. Robinhood is another. If we spoke about the S&P 500, that is a standard ETF that basically is what I would call a safe stock that is going to definitely make you some money. But again, if you're looking for the Bitcoin boom, that's not what this is about. This is long-lasting terminology, ideology, and practices that can sustain you over time and compound what you have going into the future. If you want to be a millionaire right now in the moment, I don't have anything for you, and I don't know if Justin does either. But if you'd like to start building wealth over time and start setting aside assets to do things over time and start setting up your future, what you've heard today are the most important things that I've heard, that I've learned from Justin, from other people in the business, from millionaires that I've sat down with. And the crazy part about it just is everyone swears that, oh, they were born rich, or they ran into some money, or they did the right thing at the right time. But you look at all of these different investors that are worth millions and close to $1 billion. Warren Buffett is one of them. Everyone who knows who Warren Buffett is. But this is the same man that is disciplined in his spending, that is disciplined in his routine, in buying his portfolio, and he seeks to understand what each one of his dollars are doing. Saints, to get to this next level, to be financially free to serve the Lord in every capacity that you want to serve the Lord in, focus, read, understand, and apply. It's not difficult. I won't say it's not difficult. It's not so far away. It may be difficult, but it's not impossible. It's not so far away. It's right there. You just have to take the action. Justin, we're ending the time here. What are your final thoughts, and where can everyone find you?
So just some quick things. So going back to, net worth. So one thing I use mint.com. Basically, you can link all your accounts. You could link all your credit cards, your loans, all your cash accounts, and it basically shows you a printout of what it gives you a snapshot of what your net worth is at any given point in time.
Mint.com, folks. Mint.com.
Yep. Yeah. I mean, everything that I'm talking about is for the most part, long-term investing, right? I think going back to picking stocks, when you pick a stock, you should be confident in it, to be able to weather the storm, right? Because stocks change every day for it, and it has nothing to do with the numbers. It's a very emotional thing for a lot of people. I think, just one example, I'm trying to remember the name. So like Elon Musk had got on and he had mentioned some stock. He said, go use, oh man, why can't I remember it?
But he said a product.
He just mentioned a name.
Yeah.
And this random stock with the name, but it had it was a different company. It shot up 12 times. Oh. It shot up 12-fold in one day. Had nothing. The company didn't do good. Like, obviously, people did not look at the numbers. It just shot up by 12 because Elon said, yo, use this. So in one day, it went up 12 and it came down 12.
Yep.
Right? So if you invested at that high, you lost 12, like you lost like 12 times. Like it's crazy. So just, if you invest in companies that you believe in, that are, supported by their financials, then you could weather the storm. Going back to March when everything was on the downturn, a lot of people were panicking, selling off. Trust me, there was a lot of people buying and making a lot of money when everyone else was just like giving away shares, right? It's just like you have to be able to have that mental fortitude, because when the stock market comes down, you see your net worth dropping. But you got to remember, you got to keep investing regularly, right? So then you average out, on the net, because it's going to come up. Like it's going to go back up if you're in the right. That's why we suggest S&P 500 ETFs, because
I'm a big fan of the S&P 500 ETF. Justin, thank you so much for being a part of Temple Talk. Where can everyone find you? Where's your social media?
I have LinkedIn, so that's just Justin Bain. You can just follow at KPMG. Like, if you put the two, you'll find me. I think my URL is Justin Bain CPA on there. And then also I have the email justinbaincpa at gmail.com.
Awesome. Folks, you have the information. Yet another successful Temple Talk with yet another fantastic guest. Justin, thank you so much. We learned so much. I continue to learn from you every single day. We appreciate your wealth of knowledge. Thank you for sharing with us. We have more coming for you on Temple Talk. I'm John McLeod. For Justin, I want to thank you all so much for tuning in as we continue to transition into different topics of Temple Talk. You let me know, what do you want to talk about? Remember, in all things we thank God and give him thanks for what he's been able to do in our lives and allowing us to have this conversation. Because without him, we are nothing. This is nothing. This means nothing. So first and foremost, and lastly, and everything in between, we have to give God thanks. So thank you so much for being part of Temple Talk. Just thank you so much for watching, family. Stay tuned. In the next couple of weeks, we're going to have another guest. Not sure exactly which one it is. Will it be Allen Houston from the New York Knicks? I don't know. Maybe.